Good morning, traders. It is Tuesday, the 22nd of December 2015. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Pretty light news overnight. Germany's GfK consumer confidence came in at 9.4 versus 9.3. There was a sell-off overnight on the European Open. The DAX showed a lot of weakness in yesterday's trade. From the U.S. Open to the DAX close, the market was down 1.5%, which is a fair amount. This morning at 7:30 Central, 8:30 Eastern, we got Q3 final GDP price index 1.3 versus, which is in line. Core PCE Q on Q, we got 1.4 versus 1.3, and GDP annualized, we got 2% versus 1.9. Personal consumption 3% versus 2.9. As far as what's coming up today, we just got the FHFA house price index month on month for October, expected 0.5%. This is not a major release. It came in line. Prior month was revised lower from 0.8 to 0.7. We have existing home sales at 9 Central, 10 Eastern. For November, the expectation is 5.34 million. And then also at 9 Central, 10 Eastern, we have U.S. Richmond Fed expecting -1. Looking at yesterday's action, some really interesting stuff there. In yesterday's trade, let's clean this up a little bit. So the expectation yesterday, let me turn off this developing point of control. Yesterday, for those who attended, the expectation was for it to open in value in range and drive down towards the point of control. And the idea was the prior day, Friday, that 1991 left us with a fairly poor low. We expected the value high and value low to have some significance here. We got a little bounce here when we got to value low. We never tested value high, but the market got responsive and it pushed to the point of control as expected, and then the expectation is it would likely drop and make a lower low before bouncing back up and then coming back into the value area. What it ended up doing is, as you see here, just a very choppy trade. It touched and pushed through the point of control by a tick and just kind of stuck around most of the morning. We finally dropped through value low. We got into this lower high volume node. You can see the low of the day right here. This dotted line is right against the highest volume price on the lower high volume node, and then it bounced up. What we ended up with, if we look at the 15-minute, we ended up with a W formation. I was not here into the close. Wasn't watching the market into the close, but this was a classic W formation here with a higher low. Didn't draw that right. So what we have is a low, pullback, higher low, and a pivot point right here in the 2008 50. Once put in this higher low, when I looked at this is about when I looked at it. I wanted to put out a caution shorts. Again, I was not in the office. Caution shorts, and the run up had a tremendous amount of, a pretty decent amount of delta in it. The move was a lot stronger in the Nasdaq with a pretty decent sized delta before it started selling off on the delta. But overall, what this did is we failed to take out this low and test the continuation of this impulsive move down on the close on Friday. We put in a higher low and a W formation, a classic pattern. and closed near the high on the session. The point of control is inside of the prior day's value, so technically the market's in balance over 2 days. These 2 days can now be combined to see what the overall value is. Let's do that. Let's make this a red profile just to make sure we can see it. So this is essentially what this is telling us is 2011 and a quarter is our point of control, is our combined point of control. We're currently trading 2020 and a quarter. The overnight high, if you notice, the overnight high, which is right here, this little faint line right here, is just below that 2375 left behind from Friday, and combined with Thursday's low at 23 and a quarter, this was the key target area above, the key initial target area above. We hit it in the overnight session. I want to draw your attention to the next key target area, which is right here, the 50% move from this 1960 2060, 2068.70, 2069.50 high. The mid here falls right on top of the 31. Now here's the thing with the 31. The 31 has multiple tests on it. We have the 30 area down here, 30 half or so. We have a 31 low, which we carried over, and then we have the mid. This is the Fed low. The expectation this morning is that if we push to this 31 on the first test, I expect it to fall back off before it's able to push through, if it has the power to push through. Again, it's a holiday week. However, don't forget, even though it's a holiday week, volume has generally been light through the session. You can see these prickly wicks here showing us what the volume should have been versus where it was. It's still pretty decent. The volume is still here, and the market is moving around a fair amount. This could easily push through and back to that 72.75 balance point of control, MC point of control. So for today, the expectation is that it's likely to chop around in the morning early, drop back down into this 11 quarter area. If it does find support, then I expect it to push through to 31. We'll be looking to take the initial test of 31 short for probably a 4 or 5 point rotation at least. If it does not hold this 2011 quarter, then look for it to test this 2008 and a half 2008 and a half down to 2004, but I do not expect it to push all the way through. I expect this area here to present support for the market on an initial test. So that's basically the plan for today. I want to keep this as brief as possible. The expectation is choppy open auction out of range, and then responsive selling back into 2011 and a quarter, potentially 2008, which brings us back down into the yesterday's opening swing, and then I expect it to bounce back up. If it doesn't do that, if it tests lower first, fails, and pushes higher, I'm looking for 31 short on an initial test. Above there, if it does, once it takes out this 23 quarter area, then you're back into that 2037.75. If you recall from Friday, I said that the initial push to 2037.75, this is the string of singles. Let me show you that. This is the string of singles here that we left behind on Thursday. And the expectation is that this 2037.75 will likely present another line of resistance to watch out for. So the levels above, again, 2023 25, which was basically the overnight high. 2031 is a key area, and then 2037.75 support below us. 2011 quarter, 2008 50, and then again at 2004 2005. Okay, so that's how things are shaping up. I'll leave you with that, nice and short and sweet. Um, just keep it tight. It's a holiday week. You don't want to go into your end of week holidays with a bad week. So just set your limits and stick to them. Good luck, and I'll talk to you tomorrow. Take care.